Hey, good morning, everybody. Today is Friday, September 18th, 2015. My name is Cliff Backus, and this is your push button stock trading daily video market review. Just a quick note, I'll be away again this weekend. There'll be no weekend report. The next video market review will be on Tuesday morning. I'll see you then. Markets reversed big intraday gains in the last hour of trading Wednesday, closing mixed for the session. The Nasdaq managed a weak accumulation day as it closed slightly higher on heavier trading volume, while the S&P recorded a second distribution day since confirmation of the uptrend on September 8th. Currently, the Nasdaq Composite is trading more than 1% above its upwardly sloping 21-day exponential moving average and 10-day simple moving average. That's our definition of a buy signal for the market timing model. The buy signal on the Nasdaq combined with our secondary aggressive buy signal gives us our most aggressive market timing indication, a margin signal. What this means is most traders should begin to carefully work back toward fully invested, liquidating any contra ETFs on market weakness. Our most aggressive traders can begin to selectively utilize margin to leverage their portfolios. It should be noted that while the Nasdaq has gone to a margin signal, the S&P 500 remains on a primary sell signal with a secondary aggressive buy. Our most conservative traders may want to wait for the S&P to confirm the Nasdaq. The O'Neill timing model is indicating an uptrend under pressure. Since O'Neill's confirmation of the current rally on September 8th, the S&P 500 has 2 distribution days, while the Nasdaq has only 1. A distribution day is a trading session where one of the market averages closes lower on heavier trading volume than the prior session. Too many distribution days in a short period of time can be an indication that the market may be in trouble. The recent volatility seems to be abating somewhat, although today may be an interesting day as it's triple witching day, one of the 4 days a year when options, futures, and indexes all expire on the same day. Triple witching days are characteristically more volatile. Advancing issues bettered decliners by about a 3-to-2 margin yesterday. While not looking healthy, the New York Stock Exchange advanced decline line is looking a bit more bullish, having put in a higher low and a higher high since the August 24th market low. Small capitalization stocks outperformed large yesterday and are still outperforming on a 10-day moving average basis, which is typical of a bull market. Our market momentum model is indicating recent market momentum to the upside. Our swing timing model is indicating a neutral condition in the market. The Nasdaq right now is on our most aggressive buy signal, but a note of caution is in order. With the major averages having fallen so far below their 200-day moving average, it's likely that this market will retest recent lows. Be careful with any entries and keep your stops in place. This market could continue to be prone to whipsaws. Again, while our primary timing signal is a buy and our secondary indication is a margin on the Nasdaq, these signals have not been confirmed by the S&P 500. Be careful. Okay, what we're looking at here is Moody's list of 177 industry groups sorted in HGSI, high growth stock investors, by 5-day percentage price change. The reason that we look at this is that by noting where the strength in the market is on a daily basis, we can get a better idea of where the power in the market is rotating to. The basic premise of momentum trading, which is what we do here, is that we need to identify where the power in the market is and get out in front of it. So let's see where the strength in the market has been over the past week. In the past 5 days, we've seen factory automation equipment up 26.6%, consumer products up 10.3%, renewable energy 8.9%, precious metal mining up 8%, and specialty pharmaceuticals up 6.3%. Let's take a look at the Nasdaq Composite. Nasdaq yesterday was up 4.71 points, or about 1/10%. closed at 48.93. Trading volume was heavier than the prior day. It was about average daily, giving us an accumulation day on the market. For you followers of William O'Neill, the NASDAQ is currently in an uptrend under pressure. It's been in a confirmed uptrend since September 8th. NASDAQ right now is bracketed by support down here in the 4292 area and resistance up here in the 4900 range. Notice how the NASDAQ took out that 4900 area yesterday, but closed beneath it. That's that type of balking at resistance that sometimes will mark the top of an intermediate term move. We'll keep an eye on the NASDAQ to see what happens from here. Right now, the NASDAQ is on a margin signal, which is our most aggressive buy signal, which means that our most aggressive traders can utilize margin to leverage up their portfolios. More conservative traders will want to begin to cautiously move back toward fully invested. Let's take a look at the S&P 500. S&P yesterday was down 5.11 points, or just over 0.25%. We closed at 1990. Notice how the S&P balked at resistance up here in the 49.93 area. We'll see if the S&P can take that area out in the next few trading sessions. Yesterday, trading volume was higher than the prior day, giving the S&P a distribution day. The S&P also is indicating an uptrend under pressure. Right now, the S&P is bracketed by support down here in the 1867 area and resistance up here in the 2044 range. Actually, resistance up here in the 4993 area. The S&P 500 remains on a sell signal, but our secondary indication on the S&P is an aggressive buy. I have 4 stocks that I want to take a quick look at. The first is Valeant Pharmaceuticals. Valeant Pharmaceuticals develops branded drugs in the areas of dermatology, neurology, eye health, and over-the-counter products. The stock right now is putting in this kind of sloppy first stage base. The reason it's a first stage base is we undercut the low of this 4th stage base, which resets our base count. Notice how all of this activity took place below the low of this 4th stage base. So we reset our base count to a first stage base. Valeant has a pivot point of 263.81. It gets a checklist rating of 72. Notice how Valeant yesterday traded higher trading volume than any down day in the past 10 trading sessions. This is the definition of a pocket pivot. Pocket pivot carried the stock up through its 50-day moving average. Valeant may be a good buy for aggressive traders here off of this pocket pivot. Next we have Anchor Pharmaceuticals. Anchor Pharmaceutical develops small molecule therapeutics using a proprietary boron chemistry platform to treat fungal and other infections. The stock's putting in a real nice 3rd stage base right here. We have a trend line right here which will offer an early entry point over our pivot point of 156.93. Anchor gets an 80% checklist rating, and it's difficult to tell here, but yesterday it traded higher trading volume than any down volume in the prior 10 trading sessions. That gives it a pocket pivot. Notice how the pocket pivot carried it through its 50-day moving average, its 10-day simple moving average, and its 21-day exponential moving average. This is a real good place to enter Anchor Pharmaceutical, keeping in mind that Anchor is in a 3rd stage base. Next we have Abiomed. Abiomed develops medical devices designed to assist or replace the pumping action of the heart. The stock has been putting in this really nice 3rd stage base here with a pivot point of $110.68. Abiomed is in a third stage base, and so caution may be advised here. We also have this alternate entry point right here at $107.88. Abiomed gets a 72% checklist rating, and trading volume yesterday was higher than any down day in the past 10 trading sessions, which gives us a pocket pivot, which may give you a little bit of an early entry on Abiomed. Final stock I want to take a look at is Facebook. Facebook provides a social networking platform enabling members to stay connected with friends and family via Facebook.com. The stock's been struggling somewhat recently and undercut its prior first stage base. Because it undercut that base, the base count resets to, again, a first stage base with a pivot point of $99.24. Facebook gets a 68% checklist rating, and yesterday traded higher volume than any down day in the past 10 trading sessions, which is the definition of a pocket pivot. That pocket pivot carried it through this down trend line, which may provide a good entry point for aggressive traders that want to get into Facebook prior to the breakout in the 99.24 area. That's about all I have for today. If you want to talk about any of the stocks mentioned today or any of our market strategies, please feel free to give me a call, drop me an email, or make an appointment. Come by the office, see what we're up to. Contact information is on the home page. For daily access to our model portfolios, trade updates, and more up-to-date information on our trading strategies, please take a minute to go to our subscription page and subscribe to Push Button Stock Trading. You can also follow us on Twitter at PushButtonStock. Again, my name is Cliff Backus. That's your daily video market review. Have a safe and profitable day. Keep your stops in place, and I will see you again tomorrow. Please stay tuned for our important disclaimers. All the best. Disclaimers. Push Button Stock Trading Video Market Review is produced and edited by Clifford B. Backus. Mr. Backus is a Senior Vice President of Investments, Technical Analyst, Portfolio Manager, and Partner with the investment firm of Ohannes & Liqueurs, Incorporated. Video Market Review is produced solely for the benefit of our clients, friends, and colleagues. Anything written, stolen, and/or plagiarized in this publication is done without malice. Further, the analysis and opinions expressed in this publication are strictly those of the editor and not of Ohannes & Liqueurs, Incorporated, its affiliates, subsidiaries, or any of the officers or employees of Ohannes & Liqueurs, Inc. On that note, we submit the following. The analysis, calculations, and evaluations presented herein are based on data and assumptions Ohannes & Liqueurs, Incorporated believes to be accurate. Ohannes & Liqueurs, Incorporated makes no representation that such analysis or calculations are accurate or that such valuations represent levels at which actual trades may occur. This report has been prepared from original sources, except where otherwise noted, and data we believe to be reliable. Ohannes & Liqueurs, Inc., its affiliates and subsidiaries, and/or their officers and employees or their families may from time to time acquire, hold, or sell a position in the securities mentioned herein. Moreover, opinions may differ from one entity to the next. If we are used in connection with the purchase or sale of any security discussed in this report, we may act as principal for our own account or as agent for both the buyer and the seller. Push Button Stock Trading is dedicated to the education of friends, clients, and paid subscribers. Push Button Stock Trading is an information service only. The information provided herein is not to be construed as an offer to buy or sell stocks of any kind. Push Button Stock Trading is created to aid subscribers in making informed investment decisions based wholly or in part on technical analysis. It's possible that at this time or some subsequent date, the editors of Push Button Stock Trading may own, buy, or sell the investments presented. All investors should consult a qualified professional before making any investment. The information provided has been obtained from sources deemed to be reliable, but it is not guaranteed as to the accuracy or completeness. The editors of Push Button Stock Trading make every effort to provide timely information to subscribers, but cannot guarantee specific delivery times due to factors beyond our control.